Hey guys, SGT here, and I wanted to get in touch with Josh Phair, the president of Scottsdale Silver, since we know the paper price continues to plummet. I've seen a little bounce back today, but dealers like Scottsdale Silver are saying they've had single days in which they've sold more silver than they typically sell in an entire month, and I wanted to hear it right from the horse's mouth. So we have Josh Phair, president of Scottsdale Silver, on the phone. Josh, welcome.
Yeah, thank you.
Thanks for taking the call. I just wanted to touch base with you. I know that you guys have a statement on your Contact Us page, basically saying that we're asking for your patience during this unprecedented time. What do you make of the paper prices of both gold and silver, but silver in particular, plummeting close to 40% this quarter alone?
Well, it really comes down to volatility in the physical market. We saw it on the way up when we had huge gains. Sales were quite high as a lot of excitement in the market. We saw in April as we fell below the 30 level and broke the in the 28, 29, and it just kept going and going. The amount of people that have been waiting for maybe these price points are just coming in all at the same time. Caught a lot of the mints off guard. We do manufacture our product, and then we also distribute from a lot of the mints around the world, whether it's other private mints or other government mints. And really it came down to so many orders came in at such a small amount of time that the machinery just cannot keep up with production. And that's really what we've seen. Things have gotten a little better, and then Thursday of last week happened when silver broke down below 20, and so we're starting to see that backlog grow again. And mints in particular, like Royal Canadian Mint, has been stretched out further than what we've seen. We've seen delays, 4, 5, 6 weeks on certain product. So the ebb and flow of, call it the late spring and now summer, the demand is just incredibly hot with these prices. And we are seeing, for every 10 orders that we take in a purchase from a customer, we're probably buying back, maybe one or even slightly less. So we're not seeing the silver being sold back. We are seeing people wanting the physical metal right now.
Yeah, and just to be clear, I just called you out of the blue. We have no relationship at all. I'm doing this interview because what we continue to hear out of the Mockingbird mainstream media is that gold and silver are dead. Gold and silver are in a bear market. Nobody wants gold and silver. They're barbarous relics. And in fact, what we're seeing in the physical market is really unprecedented demand, not only over at Scottsdale Silver, but at the U.S. Mint, where they're selling record amounts of American Silver Eagles month in and month out since the beginning of the year, right?
That is correct. That's the number one selling coin in the world. They're easily going to outsell anything they've done in the past on a per year basis. But we still have a half a year to go. It's going to be interesting.
Let me ask you this: how do you guys source enough physical silver to meet demand? I mean, with the Kennecott mine collapse and more than 10% of the domestic silver production came from Kennecott alone, what is your expectation for any physical shortages? Is silver just so darn plentiful that they can just dig it out of the ground, willy-nilly? They can pull as much silver out, in perpetuity to meet demand, no matter how high demand gets. What's the reality here? Because we've got a lot of people out there saying that there's plenty of silver, and others saying that there is a shortage.
Well, there's definitely there's a shortage of what I would call retail-ready bullion. When it comes to the physical market, we source from other various distributors, from banks, from refiners. A lot of the refiners that source primarily from the scrap market are seeing very, very tight markets where they're just not seeing that scrap market. It's not coming in. Call it the old hospitals that were using, silver film. Those are getting, that market is dwindling. So they're seeing less come in. When we're buying from sources that are coming through the mine, there's primary silver mines that are out there, but a lot of the product comes in from primary zinc, lead, gold, copper mines. So production's still running, but it's interesting to see as silver now has gone below what the cash costs per mine sometimes may show $8-10 an ounce. But when you factor in the whole corporate overhead of most of these primary silver miners, the price is probably closer to 22 to 25 an ounce. So here we are in a situation where a lot of these mines are not producing profits, and we're going to see layoffs. We're going to see the lack of exploration take place, and it could get interesting in the future. That being said, if you look at the Comex inventories, it's scaling back. There's still metal there, quite a bit of it, but it has been pulling back a little bit.
Yeah, it's interesting to hear you say that a lot of your silver sourced from the secondary market. You also mentioned banks. What does that mean? Can you actually source silver for production from banks? Because it seems to me that the banks that have anything in their vaults, like Soshimikata up in Canada, people have a lot of question as to what they really do have in the vaults. When you mention banks, where do you get your silver from banks? What banks?
Well, they have there's primary bullion dealers that handle the transactions for the central banks. They have access to the Comex depositories, and they can buy and sell into that at any time. So that's what you can pull those bars out at any time. Those are published inventories that are out there available online for people to see. So there is metal there. There are theories of what is there and not there. All I can go off is what we're told, and there's audits done and whatnot. We're not buying from ETFs where they could be using derivatives or whatnot, but a lot of the banks represent, that they've got access to a lot of these various vaults. So, HSBC and Scotia, as you mentioned, those are, the primary players in that market that feed, a lot of the industry.
So you guys actually do get physical metal sometimes from those players?
I won't comment directly of where our partners are at, but we have many partnerships in different markets and different places. My background is risk management, and you don't want to get everything from one source. So we work with a number of strategic partners to make sure that we can get constant supply of metal. And even if we've got some shortage of delays, we've got the ability to source metal from other markets, whether it's domestic or foreign.
Interesting. Now, before I let you go, let's talk a little bit about hedging. If you've got a background in hedging, clearly you're the right guy to run that company. I can't imagine being in the silver business when the price is this absolutely destructive and volatile. I don't understand how you guys can make margins when you're selling bullion so close over spot. How does that work? Are you hedged in the futures market? You must be.
It's all about managing your book. So the market really starts, I'm on Pacific time, but it starts Sunday night and runs till about, Friday afternoon is when everything shuts down. So we're constantly managing the buys and the sells on a day-to-day basis. And you are correct. If you're wanting to stock inventory, if you're wanting to have working metal in the system, you need to be hedged. So we're in the business of providing a product for consumers. We have to stay in business. So we are never long or short the market. Our goal is to provide high volume, a good product at a very small transactional margin.
It's a very interesting business to be in these days. Do you think people are waking up? Do you think that the average American is waking up? Are you seeing demand at levels that are like, where are all these new people coming from, and it's really surprising you? Or are you just seeing people that you've always dealt with just buying more?
A little bit of both. I think that the markets might be waking up more so in Europe, where there's maybe a greater distrust of the banking system there. The governments, people in Germany, for example, have gone through two currency collapses. Here in America, I still think the majority of the population has not really woken up and understand, and they're not understanding what's going on. So it is growing here in the States. More and more people are kind of realizing it, but I don't think we've cracked very, very much. Kind of call it the potential has not been cracked in America of what could happen.
Yeah, I completely agree. I've talked to other retailers actually. and they concur with what you're saying. Final question for you, Josh. Josh Phair, the president of Scottsdale Silver, on the phone here. Josh, what do you think is the reality of the future of the U.S. dollar as the world's reserve currency? And do you believe, of course I'm asking you as a salesperson and as a very smart individual who understands precious metals markets, do you think that physical silver and or physical gold is still a great way to preserve wealth moving forward into the unknown as the Federal Reserve continues to print unknown trillions per year? What do you make? What do you think of physical silver and gold as a form of wealth preservation?
You bring up a lot of good points. The biggest one is uncertainty, and I don't know where the silver price is going to go for sure. We don't know what's going to happen with the dollar for sure, but what we do know is there's a constant continuation, a constant pattern of all the governments of diluting, printing more of their capital, changing of taxation, changing of the monetary supply. There's a lot of uncertainty, and really, it's really about becoming your own central bank and owning assets that are not attached to credit. And what I mean by that is the housing market is so driven by interest rates and the availability of being financed. And so owning things like oil, owning things like crops, farmland, these are things that are interesting to people. But a lot of those products are very difficult to buy and sell quickly. You don't want to throw barrels of oil in the backyard. So that takes us back to the historical means of wealth storage, wealth preservation, and that is precious metals.
All right. I know I told you that was the last question. I think I have one more, and it's this. We've already discussed the fact that silver is now priced below the cost of production. That's going to hurt future supply. There's no two ways about it. Unless the price starts to rise as drastically as it's fallen, silver supply will be hurt as miners cease to produce. My question to you, Josh, is if you had to, knowing what you know, knowing your history in this market, if you had to, based on all of the money the Fed has printed and all of the known unknowns, I'm starting to sound like Don Rumsfeld here, if you had to pick a price for 1 ounce of physical silver right now today, a fair price, a fair, real, true market price, what do you think 1 ounce of physical silver is worth? Is it worth far more than $18 or $19 an ounce in your estimation?
Without a doubt, I remember when the market had risen to from the $2-3 level, and we got up to $7-8, and everyone thought it was overpriced, and it even pushed above 10, and it pulled back. Everyone was scared, saying, "Oh, it's going to go all the way back down," and it's possible. But back then, the same fundamentals, the same situation we had in front of us. And kind of fast forward to today, we've had incredible amounts of money. QE, how many are we on? There's been so much change in the monetary supply and what's going on, and we're seeing the mining sector is literally on pause here. There's not a lot of M&A activity. There's not a lot of things coming online. We're facing a situation where the production will not be able to keep up unless the price goes higher. So I think we're in a good situation for people to come in and say, could it go lower? Absolutely. But at the same time, buying at these levels in a couple years is going to potentially be something very advantageous.
Well, Josh, thanks so much for taking the call. You took this call out of the blue. I just literally picked up the phone, guys. I called the 188 number, and the sales guy put me through, and I didn't even know who he's going to put me through to. Turns out we got Josh Phair, the president of Scottsdale Silver, on the phone. Josh, thanks so much for your time and your candor. Appreciate it.
Much appreciated. We're doing our best.
Well, we appreciate it, and for those of us that are physical silver stackers, it's been a very, very, very painful, tumultuous 2 years. It's really, really sucked wind for a lot of us, but for those of us that can recognize a bargain when we see it, it's not very often that you get to buy a commodity below the, for a price below the cost of production.
Yeah, absolutely.
Thanks, Josh. I appreciate it.
All right. Great. Thank you.
Bye-bye.
Bye now.
All right, guys. Thanks for listening.